Hello, and welcome to WPM.TO Investment. This analysis is for Wheaton Precious Metals on the Toronto Stock Exchange as of 7th of August 2026, with a share price of 175 Canadian dollars. The full report is on WPM.TO. Wheaton is rated buy short and medium, strong buy long. The short call flipped to buy because gold and silver broke out on 5 August and Wheaton reclaimed its 200-day line, taking entry to full size. But the breakout is only 2 sessions old. The quality here is exceptional and scores 85. Because Wheaton buys metal at a fixed low cost rather than mining it, its operating margin runs about 75% and holds up even when mining costs across the industry rise. The balance sheet is fortress grade, roughly $2.15 billion of net cash, debt to equity effectively zero, and a current ratio of 4.5. Return on equity is about 21.5%, and development streams it has already paid for add future volume at no extra cost. That optionality is close to a free call on higher output. The headline multiples look rich, with a trailing price to earnings near 32, and that is normal for a streamer whose earnings understate the cash the portfolio throws off. The honest lens for this business is price to net asset value, and on that measure, Wheaton trades at about 0.78 times, a clear discount to the value of the streams it already owns, against a 1.5 times ceiling the framework uses as a guardrail. Valuation scores 62 in the attractive band. Analysts see the same discount. Consensus sits at 236 Canadian dollars, about 34% above spot, with 80% bullish. This is what flipped the short call. At the last read, gold and silver were in a quarter-long downtrend and the short signal was capped at hold. On the 5th of August, both metals broke out on heavy volume. Gold near $4,270 an ounce and silver near 62, and both now sit above turning up 50-day averages. Wheaton reclaimed its 200-day line and all 5 timeframes are now uptrend, with the daily momentum gauge turning up. A second quarter beat on the 6th of August confirmed the streams are ramping. Timing scores 64. The honest catch is that the metals move is only about 2 sessions old, so long-term amplification was taken to strong buy, while the medium term was deliberately held at buy pending confirmation. The risks are real and near-term, and they nearly all run through the metal price. The whole buy rests on a gold and silver breakout that is only about 2 sessions old. If it proves a bounce and the metals roll back toward the summer lows, even a fixed margin streamer derates with the complex, and that is exactly the bear case at 145 Canadian dollars, about 18% below spot, at a 20% probability. The macro calendar is loaded against a clean run. Hot inflation prints on the 12th of August and the 26th, and the Fed minutes on the 19th, and a hawkish surprise that lifts real rates would pull the inflation hedge bid out of gold. And the entry itself is extended, up 13% in 2 weeks and running into resistance, so you are chasing strength. The stop sits at 155, below the reclaimed average. Now weigh the risk against the reward. The bull case is roughly 48% above today. The base case, the most likely, about 22%, and the bear case a fall of about 18%. So you are risking about 18 to make 48. So, our call on Wheaton Precious Metals on the Toronto Stock Exchange, buy. Remember, this is for education, not financial advice. Always do your own research. This analysis is by WPM Investment at WPM.TO. The link to the full report is in the notes below. Have a great day.